One of the things I was touching on with our mutual friend Fadi is that the barriers to entry for investors are now much lower than they used to be to get into companies. Yes. And so many of the investors watching will be employees in companies. They don't necessarily want to be entrepreneurs. They're just looking to get the best possible returns. And oftentimes, because they don't have the exposure to the deals that you would receive, a lot of the deals that they do are what I call hope deals. Yes. You know, there's a great potential. There's a possibility it's the next Uber. Or how do you evaluate opportunities that come to you in terms of kind of giving you the best odds of returns?
Okay, the way I do it is that I tend to decouple myself completely from, let me say, the successes of the time, because it's very dangerous to allow yourself to be influenced by the most recent big noise in the market, like Uber is going to be something great or some other silly nonsense like that, because a lot of these stories tend to be hyped up in reality. Some of them are really good stories, but very few really are actually in reality. Yeah. The second thing is that we notice, especially with SoftBank, for example, or SoftVision or whatever they call themselves nowadays, is that there's a lot of money out there. And with excess money coming from institutional types of this kind, and you are working in a company and you'd like to be part of all of this, I think one of the most important decisions you should be making is, for example, that you should not be part of it. Mm-hmm. That can be an important decision for you to make. If you are very passionate about something that you really, really believe in and you think you have some value add, probably keeping your job and contributing a bit of your money, but you really believe in it, but keep your job. You keep your stable income coming through. And if you then want to be part of execution of that dream that really is inside you, then somebody should pay you to do that. So you shouldn't be giving your money and your time. And I think as a general advice, I'd say give it a shot. Obviously, if you're young, you have more to play with. But I think what we're seeing now in the world in this period, that people are living longer, and that is creating a new opportunity in two respects. One is that you can take your risks later in life. It's not too late. Just wait for the right moment. So don't feel if you're 35 or 40
you're
that
miss out on
you're not going to miss out.
Another bus.
Yeah, exactly. If you're 35 or 40 and you have a 10-year-old child and it's going to stress out your husband or wife or something like that, then it's much better that you just let the next 10 years go, unless you see something that you really want to do. And if you want to execute it, that's one risk.
So I think one thing you said there, which I don't hear enough of, but I think is really important, is you mentioned about saying no to opportunities. Yeah. And I think one of the biggest or most useful decisions that I made was saying that a whole area of investing was going to be off limits to me. And that was the startup space. And for me personally, it was because as an entrepreneur, I see the potential. I get excited. But to me, it was basically gambling. Like I knew what the likelihoods of success were. But because for years, I didn't have that off switch, I would waste so much time going through these deals and these opportunities, and it's the energy as well. And once I said no, I'm only going to work with companies that have already reached $1 million in profitability and above. That ability to kind of segment what you will look at and what you don't look at is very important.